So the stock market just had one of its worst days in a very long time. The Dow Jones was down almost 900 points. The S&P 500 is sitting at 6-month lows, and one of the major losers for today was Tesla. It's down over 15%. So then, of course, the question becomes, why? And the second question becomes, will the next two major economic events, the first one just in a couple of days, which is the inflation report that's about to be released, and then the Federal Reserve meeting that happens literally next week, will these two events finish the job? Will these two events send the stock market into a free fall? Well, let's talk about it. As always, my name is Derek, and I got my degree in finance, so you don't have to. Let's get right into it. So to answer the first question, why? Well, there's a main reason, and then there's the catalyst. The catalyst today was because Donald Trump has kind of refused to say or to rule out a recession for 2025.
But are you expecting a recession this year?
I hate to predict things like that. There is a period of transition because what we're doing is very big.
And of course, if you follow the stock market, you know that investors in general do not like uncertainty. They like direction and they like certainty. So a comment like this from the sitting president, in a sense, causes volatility, and that was really the catalyst that we experienced today. I don't think that was the reason, though. In my opinion, the reason is still tariffs, or I guess more so a trade war, or a potential trade war, which is heating up. Now, Donald Trump has put tariffs, taken away tariffs, put tariffs, taken away tariffs. He's done each thing twice in just a little over a month. And that, of course, has caused volatility in the market. With that said, there are some repercussions to his actions that are still taking place. One of those is, of course, China has now implemented tariffs on Canada, presumably as a way to stop American companies to exporting through Canada and avoiding the tariff. And then you have Canada, which isn't really backing down on its tariff threats, saying that it will keep certain measures in place until the tariff threats from the United States are completely gone. Now, of course, regardless of what the president says, investors and the overall market know that tariffs, whether it's for a short term or for a long time, tariffs are not good for economic growth. They're not good for companies, which of course is what the stock market is based in, because those companies usually either A, have to increase prices to counter the tariff, which of course is passed on to the consumer, which of course then lowers demand for those products, or the company has to eat the cost of those tariffs, which again cuts into its profitability. So in my opinion, today, the catalyst was Trump's comments where he refused to rule out a recession for 2025. But the main reason, the overarching reason that the stock market is moving down and has been moving down for the last month is tariffs. Now, talking about Trump, he of course was asked what he thinks about the stock market, and he says that he doesn't check the stock market.
Some of these exemptions that have been announced and some of these temporary delays, have you been influenced in those decisions because of the market reaction?
Well, there are no delays at all. No, nothing to do with the market. I'm not even looking at the market because long term, the United States will be very strong with what's happening here. Now, these are countries and companies, foreign companies that have been ripping us off, and no president did anything about it until I came along, and then I did a lot about it. You know, we took in tariffs from China $600 billion.
Well, we pretty much know that that's not really true. There are plenty of reports that say that Donald Trump uses the stock market kind of as a gauge in regards to his policies and what he says. So I think in this instance, it's a way of blunting the fact that the stock market is really not doing too great. And the fact of the matter is the stock market started to do bad as he was inaugurated as president, and before that, it was pretty much sitting at all-time highs. So there you have it. That's the main reason the stock market did so bad today, and will probably continue to do bad until we get something that signals it to head in the opposite direction. Now, two main things that could cause that are the inflation report that's going to be released in just a couple of days, and then the Federal Reserve meeting next week. If the inflation report comes out better than expected, the stock market might like that, and that's because of the Federal Reserve meeting the following week. And that's, of course, because the Federal Reserve literally uses the inflation reports as data points in regards to whether or not they cut interest rates. And of course, the stock market wants lower interest rates because lower interest rates are good for the stock market. It makes borrowing money easier, which means people can invest more. It makes research and development for companies cheaper, which means they can grow faster. And overall, a loose monetary policy tends to favor the stock market. And that, of course, prompts the question, where are the odds currently for an FFR, federal funds rate, cut next week? Well, currently the CME Watch tool, which tracks the likelihood of an interest rate cut, has the probability sitting at 96% that there won't be a cut, which means that right now, all else being equal, there's not going to be a cut. The only thing that could potentially sway that scale in the opposite direction is a fantastic inflation report in the next couple of days. The problem is, for the last 4 months, inflation has been reaccelerating, and it is likely that that will continue due to the inflationary environment that we're in. And yes, some of that also has to do with tariffs because companies have preemptively raised prices for those tariffs. But in reality, the main reason for that is simply that we're still feeling the effects of quantitative easing, stimulus, and a ton of money injected over the last 4 years. And as the Federal Reserve has started to lower its FFR over the last few months, those inflationary pressures have risen once again. Okay, so now you have the gist of what's going on. Now, what are my thoughts? Well, in my opinion, the market will likely continue to move lower, at least for the short term, and companies like Tesla, which are heavily tied to the current administration through Elon Musk, will continue to feel pain. Now, this pain that Tesla is feeling is not just random. There are also some major reports that demand for Tesla is shrinking, especially in European countries. And of course, if you can't sell vehicles, you can't make money, which means that your stock is obviously not worth as much as it once was. But in my opinion, this will likely continue at least for the short term. And I mean the very short term, let's say a week, a couple of weeks, until some other catalyst switches people's minds and it starts moving in the opposite direction. Because remember, at the end of the day, the stock market is just a bunch of people. People like, yes, hedge funds and very experienced traders, but also people like you, like me, like our family members, our friends, and just people who are investing for their retirement. And those people, ourselves included, can be more emotional when it comes to investing decisions, which is why we get this massive volatility in the market. I hope this video was informative. I hope it was short and sweet. I know it's a little different than what we usually do, but if you like personal finance, world economics, and investing, you are in the right place. And if you liked this video, please consider subscribing because it helps the channel out tremendously. With that said, I hope you have a fantastic rest of your day, and I will see you in the next video. Take care.